Good evening, everyone, and welcome once again to the Open Door Show from Property CEO. My name is Richie Clapson, and I'm here with the other half of Property CEO, Mr. Ian Child.
Good evening, everyone. Hope you're well.
Good stuff. Now, it's great to have you here. Just in case this is your first time, what have you let yourself in for? Well, let me tell you, it's going to be good fun. You know, it's 45 minutes, quick fire. We can talk all about property, and it's all about being positive in this very difficult world at the moment, although lots of good light at the end of the tunnel right now. And as I say, all to do with business, property development. Isn't that right, Ian?
Certainly is. Richie and I run a company called propertyCEO, and basically our job is to train people how to become successful small-scale property developers. Loads of amazing opportunities out there right now, particularly for new developers, people getting into development for the first time. So we want to help people find out more about those opportunities and to see if development might be a good fit.
That's it. And for a lot of you, perhaps it is. And a lot of you, obviously, on this evening, I can see are already students of ours. So you're already developing, which is great. But of course, opportunities are only there for those that go and seek them out. And in a global pandemic and recession, it is a great opportunity to go out for developers and get stock at a cheaper price and deliver it into the market when things pick up. So yeah, really good opportunity right now. As always, we're going to be talking, serving up some advice, predictions. Above all, though, we're going to have a bit of fun doing it. So non-stop positivity in these 45 minutes. Please give us a quick wave if you can actually hear and see both of us, please. Give us your hands up. Give us a quick wave. Ah, what a wonderful crowd. Thank you very much. Thank you very much. That is good. That is good. Also, just give us a quick wave. I've dropped all the hands. Stop it. Put the hands down. Give us a quick wave if this is your first time. I'm sure a few of you, it's the first time on the show here.
Oh, quite a few.
Yes. Yeah, no, a few of you. Good. And I'm not going to ask you to wave if you're a returning guest because we can see that. So it's good to have you on here this evening. So Gabriella's on. Gabriella's often on. So Gabriella, good evening. Jackie's on. Charlotte's on. Dan's on. Helen's on. Yoko's on. Hello, Yoko. Doral's on. Doral, good to see you again this evening. Ranjit is on from Property Investor News. Great little magazine. That. No, don't try and give him a mention because it's like a free plug. We don't want to do that. Brian's on. Who else is on? Lee's on. Dan's on. Hello, Dan. Nikki's on. Deirdre's on. James is on. Rennie's on. Roma's on. Paul's on. They're all on. Everyone's on here this evening. Patrick's on. Andy's on. Hello, Andy. Good evening, gents. Says Dan. He's very polite. He's the only one who's properly typed in the chat box, apart from Ranjit. Maybe the rest of you are a little bit slow, but it's always nice to say good evening or hello and how are you and something like that. I mean, maybe you want to comment on our shirts or maybe Ian's state of Ian's hair, whatever you want, really. It's entirely up to you. Anyway, tonight we're Malcolm says good evening. That was a little bit late, Malcolm, but I'm sure you're not the only one. Yeah, it's good. It was good. Jennifer's just joined. Hello, Jen. Don't worry, we were waiting for you to start. So welcome on board this evening. Helen says, following the budget announcement, any top up. Hang on a minute, we're going to talk about the budget, Helen. Just give us a second. Evening, Jen, says Steve. Good evening to you, Steve. Right, yeah, we're going to be talking about the budget this evening. Of course, it all went on yesterday. Lots of things were happening. So what we did is we did a bit of research. Well, to be fair, actually, I outsourced it. Got a bit of research done on the budget. I've been so busy, very busy, chilled back. You know, just getting ready for this evening. So I delegated to our junior member of staff, Mr. Ian Child, to research the budget and all of its implications. So would you like us to talk to you about the budget and what it means or doesn't mean to developers? If you do, give us a hands up, give us a wave. Yeah, good. They do. It's good actually because we've got nothing else prepared. So it is tonight's news. So if you didn't want us to talk about the budget, I'm not sure what we were going to do. So you know, it's good that we're going to do that. It is a question and answer show. So whilst we're going to talk about the budget, we're not going to talk about the budget for 45 minutes. I can tell you that. You'll be bored stiff. So please throw the questions in the chat box and we will answer questions. Helen's already got a question in by the looks of it. Thank you in advance. Well, that is in advance. That's good. But please pop them in or anything to do with property development. We will try and answer it this evening. Rob's just joined. Mark's just joined. Thomas has just joined. So they're all coming on board, which is great. So, Ian, I'm going to ask, have you done the research on the budget?
I have done a bit of research on the budget.
A bit of research. Okay. Well, let's go through it then. So let's pick up a few headings. let's talk about Help to Buy, because I know there was some stuff in there on Help to Buy. Do you want to just give a quick overview to our family of CEOs all about Help to Buy? What's been going on there?
Well, Boris is intent on changing or converting generation rent into generation buy. So basically, over the last kind of 12, 24 months in particular, we've seen a lot of mortgage lenders insist on kind of minimum deposits of 10% plus. Now the Chancellor has announced that it's going to be 5%. So deposits, first-time buyers up to £600,000 will be 5%, and those 95% mortgages will be coming in effectively from now. So that's a kind of partially underwritten by the government, but I think some pretty good news there. It all underpins this kind of sentiment that the government's got, just in terms of making sure that the housing market doesn't fall over. So as you can see, lots of trends here in terms of keeping construction and housing kind of moving smoothly over the next couple of years. So that certainly went down well.
Yeah, I think that's an interesting one. I think, there has been a struggle for first-time buyers to get onto the market. So a 5% deposit will really get some momentum into the market. That's good. Okay, well, linked to that then, let's talk about stamp duty extension, because I know they've extended that. Forgive me, because I can't remember exactly what they've done. But obviously, primarily, I delegated it to you to find out. So what's gone on with stamp duty extension?
Yes, you were too busy preparing for this evening, weren't you? Yes, the stamp duty has been extended. It was due to end 30th of March. Now it's gone to 30th of June. And after the end of June, there's kind of a bit of tapering in that the nil rate band is going to continue. So it's up to, I think it's the first £250,000. That is going to be nil rate up until the end of September. I think it's sort of good news. Of course, it's good news for the housing market in general. Estate agents are thrilled. Surveyors, perhaps less so. They've got another whole load of running around and deadlines that they're going to have to hit. I think what it does do, it still creates a little bit of a cliff edge, because we've got the situation where if you miss the June deadline and you hit the tapering, where the tapering starts, you could still be in for a hit of about 12.5 grand. I think the maximum saving you would have got was about 15. So there's still going to be a lot of pressure for the in progress, in flight applications and purchases to actually go through by the 30th of June. That's going to be quite an important date. But certainly, if we combine 5% deposits and the stamp duty extension, there was quite a few smiles on faces in various parts of the property industry.
Yeah, I think that extension, I mean, it's going to be a challenge, as you say, for people literally trying to acquire something now to get through by the end of June. But I think it does give a sense of relief for those that were trying to get through by the end of March, that's for sure. So that's really good. Okay, what about CGT, capital gains tax? What's been going on with that? Because they always do something on that each time. What do we result in there?
Well, it was, I think there's probably a bit of deferred pain here, but they've increased the tax thresholds, CGT thresholds, but then they're going to fix them for the next 5 years. So from after this year till 2026. There was a lot of talk about the tax rates moving to become aligned with income tax. So a higher rate taxpayer, instead of paying 28% CGT, would then pay 40% or maybe even 45%, which is going to be a big hit. That didn't happen. Lots of people I see are saying that potentially is going to happen in the autumn. So I think there was generally, the flavor here was that whilst a lot of people, a lot of businesses are in a really challenging position at the moment, we don't want to hit people too hard, but ultimately we've got to claw back some of this money. And one of the ways in which that can happen is perhaps to introduce that CGT hike a bit later in the year when the economy is in a better place than it is now. So in terms of what that means for property, I think for property investors in particular, it could be quite challenging, simply because obviously, if you're divesting yourself of any part of your portfolio, then you could be in for a significant hit on the capital gains. So who knows? We may see some investors kind of start to perhaps downgrade their portfolio over the next 6 months and do it now rather than later to take advantage of that window. But that's only a guess. We don't know what's going to be coming in the autumn budget, obviously. So that was CGT.
Sticking on the tax theme, what about the old Corp Tax? What's going on with corporation tax then? Because that's, I think, the biggie, isn't it? That's the big headline.
Yeah, so we're going back to the good old days when there was a two-tier corporation tax system. And that's going to come in from April 2023. We're going to see the corporation tax rise from 19%, where it is at the moment, to 25%. I think a lot of pundits thought it was only going to go as far as 23%. Good news is, though, that that's only going to be for companies that have profits of over £250,000, and then companies with profits between up to 50,000, they'll continue to pay 19%, and then the gap between the two. So there's going to be some tapering. So if your profits are between 50 and 250, then you will, there's a sort of tapering effect. I think the Chancellor said that only 10% of businesses, like the most profitable businesses, would end up paying the higher rate. But clearly, yeah, the government's made it clear they want businesses to effectively pay their way for what has happened over the last 18 months, 12 to 18 months. And yeah, this is where the cover sort of rubber hits the road, really. There are a few other things. I mean, VAT threshold didn't change. That's still staying at 85%. There was some a super deduction arrangement whereby some of the companies investing in technology and assets, new equipment, and so on, can get some benefits there. So I think, yeah, in certain instances, from a construction industry perspective, there's going to be a bit of good news there. But yeah, it's really that headline rate of corporation tax rising 25% from 2023, which is the main one.
So I've just twigged on this one today, this super deduction that you just talked about, where companies invest in technology, they can get some potential tax benefits. Is that why today you propose buying a new coffee machine in the office?
No, well, unfortunately, we have had a little bit of a disaster. This is actually, I did look it up. It is in our disaster recovery manual when the coffee machine breaks. So I'm just going through the procedure today.
Yeah, well, you act like you have to, Okay, and we've got some questions coming in, so we'll get onto those in a minute. But the final thing, let's just chat about this evening. I mean, the old furlough scheme, which is now being extended again. What was the sort of bit of the detail around that, Ian?
Well, it's a very old furlough scheme now, isn't it? And it's going to be even older because they've extended it until 30th of September. In fact, most of the budget, I think, was actually leaked before yesterday, but so that didn't come as a massive shock to anybody. I think what is that actually going to mean? Well, we've speculated for some time now. We can see that there are businesses that I guess to some extent being propped up by the furlough scheme, and when that ends, kind of the tide goes out. And so that's what's that going to mean for property development? Well, one expects that there will be some properties coming onto the market. So there's I think that what's the government is trying to do here is kind of just smooth the way. It's trying to just basically create as fewer kind of ripples as possible in situations where there's there's disaster lurking, whether that's in business generally, and specifically, obviously, we've been talking about the property market, and this is just another example of that. There's some other noise around and things going on in terms of self-employed. They've got an income support scheme, and they've just announced the 4th and 5th tranches of that. There are some restart programs, which sound a little light perhaps, but they're still trying to encourage some of the businesses that have had to, the non-essential businesses that have shut down, to kind of kickstart them back into recovery. I suspect, however, that there's still going to be a significant number of businesses that won't be able to make it through the end of furlough, but we'll see. And then there's also a new business loan scheme that the government's announced. So it's offering 80% guaranteed loans to businesses for quite a broad range, loans of between 5,000 and 10 million. So Not quite sure of all the detail on that. I think the devil is always in the detail in budget, isn't it? And I'm sure there's more to come. But yeah, those were the headlines.
Let's get a new £10 million loan and buy the new coffee machine then. Let's go for it.
That would be a good coffee machine.
Look, guys, I mean, you know, the great way to get the budget information is just get someone else to do it all for you, as I've done. This is all about leverage and delegation. So you know how to be a CEO. Word of warning though, please, that's just our overview of the budget. What you should always do is deal with your accountant. Most accountants will be putting out their own announcements, and they'll be trying to consume all this information. As Ian said, the devil's in the detail. They'll be looking at the detail and trying to tell you what that means for you. So hopefully we're giving you a quick overview, but you really need to get some accountancy advice of how these things are going to be affecting you individually. But we've given you a few headlines. Helen's first question that she put in literally straight away was, following the budget announcement, any top understanding that you could share with us, particularly opportunities and concerns for the future, please? Thank you in advance. I think hopefully, Helen, we've shared the initial sort of overviews from the budget. So there we go. Let's have a look. So please fire your questions in and we will see what we can do. So first question I've got here. So Rob's question says, I fell foul of the 1989 recession. Wow, it's a long time ago. I don't think I was even born in 89. Rob, you must be very old. Fueled by the evolution of double tax relief. So basically saying house prices soared, then plummeted once the deadline passed. Things seem to be in a similar situation now with the stamp duty holiday, and I fear the same thing will happen. Could we get your thoughts on whether a similar thing may happen? Yeah, you can get my thoughts. I'll give you some thoughts. I think
you're not delegating that one.
No, I'll do that. I think you've chatted along for a bit. It's only fair that I have a little go this evening, isn't it?
Yeah.
Not all about you.
No, that's true.
Yeah, good. So, Rob, look, I think actually you're not alone in thinking that. There's a number of people who are saying you're just propping up the inevitable. And I mean, Ian just alluded to that then, is, you've got the stamp duty holiday and the furlough scheme propping everything up. And those that are regular on this show will have heard us talk about many times last year, when furlough ends, that's when we're going to see a lot of things happening, because they are just propping up businesses. I mean, the good thing, if he sticks to it, is that companies will have to contribute now reasonably heavily to keeping those employees on board. So those companies that really, have got a genuine chance of survival, great. What a good solution this is going to be. Those that aren't, they may just get rid of those because they're not going to pay that contribution. I think inevitably, though, Rob, I think there is going to be this drop off at the end, because people are encouraged to do this. The stamp duty will end, so those people that are trying to get in and squeeze into the neck of the bottle have done all of that. And of course, with furlough being removed, there will be a huge amount of people there that are unfortunately get made redundant. Obviously, the Chancellor's gambling on the fact that other businesses will carry through and there are going to be some opportunities. And I think the 95%, the 5% deposit will try and go beyond that and help it. I think, though, as a developer, and I think this is the question that sort of one asked, does that affect us as a developer? If you're putting something in the market right now, yes, okay. What we've always talked about is recovery in 2022, and what the Chancellor's trying to do is to get a fairly swift recovery, trying to extend this along, prop it all up, and then the recovery will take that momentum. I don't think he's in any doubt that many businesses will fall by the wayside as soon as furlough goes. But I think for those of you that are starting in development or just looking at sites now, you're not going to be putting something in the market in development. I'm not talking about a quick flip in 18 to 24 months time at the earliest. And for those that's got trained, it's probably 24 months plus if you're not trained yet. Well, that is, in 2022, maybe 2023. Well, I think the recovery will be there. So I think actually this drop-off will happen potentially quite swiftly at the end of this year. So you don't want to put anything into the market at the end of this year. But I think we've always talked about, mid-2022. That's the time that we think of recovery. And I think that is still, in my opinion, I think that's still the case. The drop-off in September, yeah, I think it'll be quite steep. And I think then we'll take a few months getting into 2022 to recover. So for most developers, I think that will be fine. There we go. There's a couple of questions answered. Ian, do you want to pick a question up and then I'll look for another one?
We've got one from Jim, which I think is very similar to Rob's in a way, but I want to make sure that it is. Do you think that the extension of stamp duty exemption through to September will help new developers out? So I think the answer is kind of broadly similar to the one Richie just gave, which is, yeah, you're not, unless you're mid-project and you're going to be putting them in the market during that period, then no. I think going back to what I said earlier about the government's kind of planning and aiming to keep the housing market and the construction industry kind of working and fully operational for the foreseeable future. I think what we've done is we've seen that it has clearly been a priority. If we look at all of the industries that are kind of hanging in the balance at the moment, there are a number that have been frankly left behind, particularly things like there's been a lot in the press about the travel and airline industry getting a raw deal, but there's been an awful lot of focus on construction and on the housing market. It's such an important part of the economy and such a huge number of people work in it. So I think there's a comfort factor there that whilst we don't know exactly what's going to happen, I think we can see the government's trying to smooth things out and it's got its sort of crystal ball in place. Luckily, the government also does have within its remit, as it has done now, the ability to extend things and change things and kind of react to the way the market is being affected. So I think, you know, with that in mind, that's likely to be a focus going forward. So there's going to be that overarching factor is going to be good news for developers, but you just bear in mind, if you start today, it's going to be, as Richie says, 18, 24 months before you're putting your flats or houses, whatever you're building, into the market. So
let me pick up a couple here. I'm going to pick up Sadie's one very quickly because I think it's a similar thing, and it doesn't matter. We can have similar questions. Sadie says, with the coronavirus job retention scheme now extended through to the end of September, how do you think that may affect potential development opportunities? So I think in some ways what I've just said earlier, but also I think just the other slight twist on that in terms of development opportunities, okay, rather than where is the residential market. Sadie's question I think has got a slightly different take. We've always talked about those companies that eventually will have to let go, then, you know, properties coming on the market. So I do think you're going to, there are a lot of companies that, Sadie, that just will not carry on going forward through the rest of this summer, just propping up their staff because they just can't keep doing that. They've got all their other costs, you know, associated with rates and other overheads, insurances. They've got to keep their businesses, their premises going. So I think some of them will keep falling by the wayside each month, unfortunately, as sad as it is, but that's what will happen as we go forward. I do think, though, there'll probably be another little surge of opportunities after September, once the furlough scheme gets ended, of companies then go, right, that's it. I've done the honourable thing. I've kept my staff going. I'm sorry, guys. You know, that's the end of the day. So I do think there'll be some more opportunities come to the market then. Very quickly, I'm going to pick up Brian's one, then over to you, Ian, for the next question. But Brian says, if you have the 5% deposit, what is the affordability sum? I've no idea, Brian. I don't know how they're working that out. I know that a few of the high streets, I think Lloyd's, HSBC or Barclays, I think were on board. Virgin Money was trying to come on board to support this scheme. How they're doing the affordability, I do not know. There's obviously going to be some calculation there. Devil's in the detail, as we say. But yeah, it is an interesting one of how they're going to stack all these things up. But I mean, the government are obviously going to back that in some way. So I'm assuming there's going to be some criteria that you've got to better afford X, and then the government will back the rest. Who knows? Hopefully that's answered that. Okay, Brian, that was yours. Over to you, Ian. What's next?
I've got one here from Thomas. Evening, Thomas. Thomas asks, I'm looking at current PD conversions, permitted development conversions, but would I be better off waiting for the updated PD in August? So this is where we're anticipating that the government's proposals, the Class E, which is kind of pretty much a whole raft of commercial, retail and industrial buildings, light industrial buildings, can be converted into residential. I think obviously there's a caveat there. The government hasn't yet published its findings. It's entered a consultation period. I've seen in the press, in the trade press in particular, over the last couple of weeks, there's been a lot of people raising the concern that we raise, which is that ultimately if you have free rein for people to develop the high street, then who's to stop everything being converted into the most profitable kind of product, which would probably be housing, and then we just don't have a high street anymore, we just have a big housing estate. So I'm expecting the government to kind of do something about that. I'm not entirely sure what it's going to be. We know that we've got up until August to be able to kind of publicize that. So I expect something's going to come out before the summer that's going to give us a steer on the direction of travel for that one. I think what you can do now, though, is be getting your ducks in a row. We still have permitted development rights that cover a whole raft of things, and those are going to continue. We've got these new rights for Class E to residential that are in the offing, and I think what you can do is work out a strategy. You've got a great opportunity now to hit the ground running. Another thing that I heard, and I think we might have mentioned a couple of weeks back, was that one of the tools that the local authorities have that could prevent some of those things happening are what they call Article 4 directions. So basically where they put in some rules that say, no, you need to have planning permission no matter what. And of course, that would be challenging because that would kind of go back to square one. But the lawyers were speculating that would take perhaps a year after August to come into effect. So therefore, you could be in a situation where there is a window of opportunity for some of these developments to take place before any Article 4 directions come out or take effect. I think the government might be playing it a bit cuter than that, though. I suspect they may well come up with something that tries to appease everybody and create a sort of a win-win solution. But in answer to your question, I would say we're not certain yet that everything's going to go ahead. There could be some changes, but now is a great time to do your homework. And if you're looking to convert things like retail properties, you're likely to be, there's a great opportunity there to get your strategy in place and hit the ground running in come August.
There you go, Thomas. Well, this is our 45th show, 45th Open Door show, and I can officially announce that this is my favourite show this evening. Okay, and I think it's nice when people put comments in the chat box, and I think it's important that I read this comment out. This is from Helen, and we answered Helen's question in the round earlier. She got in earlier. She says, oh, hang on a minute, I just got to scroll down. I've got the wrong question from Helen there. But so Helen says, she said, hi Richie, forgot to say that you look great. Lost more weight. Brilliant. People notice. No one else comments apart from Helen. She said you look better than the photo on your website. Okay, fair enough. Says my better half, Tom. All right, Tom, I think that's a compliment. I'm not sure if that's a backhanded compliment or not, but maybe I should change the photo on the website. So maybe I looked a bit porky on the website, but now I'm a super slim and trim. Thank you, Helen and Tom. Appreciate that.
Cameron Everlies.
My favourite ever. Okay, let me go more serious now, and let's pick up a question here. So George says, good evening, George. George says, sounds like buying a development opportunity before the end of the year could be a mistake. No, not really. No, not at all. I think there's definitely going to be some opportunities that will be coming in before the end of the year, but I can tell you there's opportunities now. So I don't know where you're at, George. One big mistake I would say, and just a word of warning for anyone, we do these shows, we give out lots of free content, we give you straightforward, no BS, no fluff advice on these type of things, but please don't just give development a go. So if you're not that experienced, don't go out and rush out and buy something, think it's cheap, I'm going to make a load of money, because you'll probably fall flat on your face and make a big mistake. You can make a lot of money in property development, which also means you can lose a lot of money. Okay, so be very, very careful. It's not easy. It's entirely possible, but it's not easy. But coming back to the comment, there are right now out there lots of motivated sellers. Okay, we already know those regulars of the show we regularly update you on the news. That's because you guys are lazy and you want us to give you the news and you don't have to do that research. And the amount of times we keep talking about actually, let's clarify something as well. I often research the news. It's not just Ian. So the point I was going to say there is that about the retail shops. We talked about Debenhams and what ASOS and Boohoo have done and bought up all these other brands and the Philip Green's empire. Huge amount of stock coming to the market. Okay, what's all those landlords going to do? They want to get rid of them. Okay, and what about all these companies that have already gone and closed down or restructuring? All those offices that are available. There's plenty of stock in the marketplace now with motivated sellers. So no, you don't have to wait to the end of the year. I just think there are going to be more opportunities. Yes, keep coming to the pile, but right now there are some great opportunities. So there you go, George. Hopefully that's answered that question. What's next, Ian?
We've got one in from Sean. Good evening, Sean, who asks, isn't there less risk if we go for a scheme with full planning in place rather than try and get PD. Well, the problem with something that's got full planning in place is that, well, the question is where are you going to be adding the value? The person who has got the planning permission is presumably kind of maxed out on the opportunity. They've worked out how they're going to get planning permission to build, for example, 10 flats. So the chances of you building 20 flats or even 11 flats is possibly quite remote, because they're more than likely to have maxed it out. And quite often, for fairly obvious reasons, those opportunities are kind of on the open market, and they do look attractive. You know, they do look kind of nicely bundled, kind of an off-the-shelf deal that you could put together. And of course, you don't have the planning risk because it's already been granted. The problem is you're not going to be able to add any value, and it then becomes a race to the bottom. The person that is going to win that deal is the person who effectively is going to be paying the most for it and being able to take the lowest profit. And you really don't want to be looking at deals where you're going to be taking the lowest profit. You're unlikely to win them anyway, and if you do win them, quite often because you may have made a bit of an error in your calculations. I would steer clear of those. Instead, what you want to do is aim for stuff where you can add value. You can see opportunities that other people can't see, because that's going to enable you to pay more, and so you've got the upper hand there. The other way of doing it is and maybe even combining it, is looking off market and you know, striking up those relationships with people in the market, with agents in the market, looking for properties that are coming on, and then being able to react quickly and operating, with sort of below the radar, as it were, and not purely looking at things that are on the open market. But yeah, stuff with planning that's out there, it can be a race to the bottom because of it's just a battle on price. There you go, Sean. I hope that answered your question. What we got next?
James's question. James says, hi guys, I have a property so pay attention guys, this is a long question, okay? I have a property consisting of one retail unit paying 24k per annum. I now have achieved planning permission to convert the retail unit into two, add an extra floor, and convert the uppers into 9 2 and 1 bed apartments. Excellent, James, well done. Is it a good idea to hold off building until the market settles down, or build now and sell when completed, or sell the property now with planning gain? Blimey, how many questions in one there? James, you got to do your numbers, okay? And yeah, I mean, if you're going to build right now, so let's say, James, and I don't know, you've got planning permission, I don't know if you've tendered this and got that together and how long it's going to take. You're building an extra floor on this, okay? So the first thing I'd say to you, James, is when are you going to put it into the market? And I guess this is what's prompted your question. So bearing in mind the question that I think Rob asked earlier about, you know, do we think there's going to be a drop-off? Personally, I think there could be, okay, after the end of September. So if you were going to build this now and then on completion, you're putting it into the market for sale in, say, October, then I wouldn't build it out right now, okay? I wouldn't actually put a property into the market in October or plan to put it in October. October's not too bad, but October often means a bit of slippage or a couple of things you don't quite start when you wanted, the tenders don't quite come back as you want. Then you're putting it in the market in November, and of course November then gets too close to December and people don't buy anyway, and December and January you lost. So you better to delay the start, delay that expenditure on all the cash so you haven't got all the finance out, and then drop it into the market February, March next year. That's potentially still, in my opinion, a little bit of a risky time. You're not going to necessarily command the prices you really want. If you can put it into the market next summer, I would say not a bad time. So it depends on your build. You've got a fair bit going on there. You've got an extra floor, you know, so there's 9 apartments, splitting the retail unit. It's not going to take you a year to do that, but I'm assuming not, but there's a fair bit of work there. What I would do, James, is work out right now what you're going to get. So if you're going to get a planning gain, okay, have a look at that. You know, if someone's prepared to buy off you, there are plenty of developers out there that will take a planning gain, stick the money in the pocket, and then go again. So why not? If you think that ticks the boxes, great. Clearly, you're going to make more if you build it out, but you have an element of risk. The other thing I'd throw in there, and James, forgive me, I don't know how experienced you are at all in any shape or form, so please forgive me if I'm going to suggest otherwise, but make sure you've nailed down and understand the cost for an extra floor. Okay, there are a lot of, and I don't know whether you've done this under one of the new PD rights, you know, AAAB, etc., where you can put extra floors on. Some people might not be aware of that, but there are permitted development rights you can do that. that one of the problems with that is people think, okay, I've got planning permission, that's great, but actually structurally, how can you build it? Technically, how can it come together? And it's all possible, but have you got enough costs in? So make sure, James, you've got those costs covered to put that extra floor on that building. The last thing I would want for you is to crack on, go ahead, think you're making a certain amount of profit, and maybe through a lack of experience, and I say, please forgive me, maybe you haven't got a lack of experience, maybe you've got heaps of experience, but hopefully this type of comment helps everyone else who's listening, is if you have a lack of experience, then you might not get the costs accurately pinned down, in which case you might not make the profit you wanted to. So just think about that timing and when you're going to drop it into the market, James. Are you interested maybe just to take the cash and go again? And equally, have you got the cost nailed down? There you go. There's a few thoughts on that. Can't give you a categorical answer, but hopefully that gives you a bit of an opinion this evening. You got one to go with, Ian?
I have one here from Kathy. Kathy asks, can you explain a little more about permitted development rights? Is it like on domestic houses where you can just build extensions without any permission? Okay, so yeah, called the same thing, permitted development. We do have rights on our homes to be able to extend. Quite a lot of those, though, we're able to do without reference to anybody else. You've got an automatic right to extend. In most cases, the PD rights, when you're converting the use of a building, because PD typically involves the change of use of the building itself. So if we're going from commercial or industrial or storage or whatever, if we're converting stuff to another use class, quite often residential, yeah, you can't just go ahead and do it. There are some exceptions to that, but in the main, you typically have to make an approach to the local planning authority, and that's typically using something that's called prior notification. And what happens there is that the local planning authority will basically assess your proposal to change the use under permitted development, but they can only reject it using or assess it using certain key criteria. Whereas with planning, they can kind of throw the book at it. They're looking at everything. Typically, with prior notification, there are some set parameters that they've got to assess and look at it by, and in some cases there can be some time constraints on that as well. Yeah, that's what permitted development is. But one of the massive advantages, as you will have heard us no doubt say before, is that it kind of reduces the risk. There is a lot of risk in planning. With permitted development, the risk is significantly less, and as a result, it makes it ideal to use that for particularly for smaller projects, and even doubly more so for people doing their first project. There you go, Kathy. Hope that helps. Hope that answers your question. What's next, Richie?
Well, I'm going to pick up two questions because I feel like I want to do a little bit of momentum on this, and I'm looking at the clock so we can get through as many as we can. So two quick fire questions. Dan says, do you think there is anything in the budget announcements so far that can support small scale developers? Well, I don't think there's anything specific in there, Dan, which says, right, this is going to help small scale developers, go and do X, Y, and Z, other than this general momentum of trying to, keep the housing market going. And for small scale developers, if you're in the development market right now, as we've just been chatting about, and if you put a project in for sale, you've got to think very carefully about your timing. But for those people, and to be fair, a lot of you guys out there that are listening to Open Door, that come on Open Door, I know a lot of you are relatively new or just thinking about getting into development. We get a lot of feedback on that through the support team. They say, yeah, people are asking and making inquiries. So for a lot of you out there, you're relatively new. Well, look, this 95% is a great opportunity. They're trying not to have a total collapse of the housing market, even though, as Rob said earlier, we probably agree there's going to be a drop off. I think that this momentum, trying to keep it going so the crash isn't too much and it can recover, is probably part of what they're trying to do for small scale developers. I don't think any of the corporation tax things that doesn't help us. That goes the opposite way, because you want to make more than £50,000 on your projects, I'm sure. And £250,000 is the sweet spot that probably is an average sweet spot down for most of our mentees to go and make out of their first project. So you're falling right in that bracket. Of course, it's tapered anyway from 50 to 250, as Ian said earlier. So I don't think there's anything fundamental that really helps us. But I think really it's just this general vibe that the whole government are trying to help small scale developers primarily with the PD rights that exist out there. So I think that's there. Anything in the budget particularly, I don't think there is anything that pushes it specifically. The follow-on question I was going to pick up with that, because it sort of links, because I just mentioned PD rights, was Thomas says, do you guys ever go to planning, or I can't even speak, or are you always looking to exploit PD as far as possible? Well, Thomas, we personally, we would rather do anything with PD. Okay, in terms of training our students, we will categorically tell all students to go down the PD route. Okay, not to say that you can't go planning. And when we teach people, Thomas, we teach people to be developers. Okay, in the roundest sense, we don't teach a strategy. We just don't teach a build to rent or land assembly or PD. We teach developers. We teach people to be a developer in the whole. So you can do anything, okay? But what we will always say, categorically always say, and if people don't do this for their first project, I personally would go around and visit them and give them a bridle kick, okay? Is you go permitted development rights for your first project. And I'm pretty certain that once you master permitted development rights, you'll probably do it for your second, your third, your fourth, your fifth, etc. Why wouldn't you? Because going down the planning route, the planning system in this country is broken. It's broken. And you go down this road, it's a long, tough road. Some people are quite successful, but the majority takes you a lot longer. It's not a good idea for your first project to go and do that. Because most people, I mean, ask yourself this, all of you ask yourself, how quickly do you want to return out your first project? Are you prepared to wait 12, sometimes 14, 16 months to get planning? I have to go to appeal. Or would you rather do something that guarantees, as much as we can guarantee, a return in 18 to 24 months? And I think you know the answer. So that's the route we'd rather stick you down. Great answer, says Thomas. Thanks a lot. No problem at all. Okay, what's next?
I got one in from Ruben. Ruben asks, how would I work out how much a conversion would cost for a potential project? Should I get the trades to go around and give me their prices, or is there an easier way? The scheme I am looking at is a lot bigger than I have done with buy-to-lets. Okay, so yeah, a bit of a step change when we move from buy-to-lets. So typically when you're refurbing a property that you're going to be renting out, you are the project manager, you are the person kind of bringing in a builder perhaps, and some other tradespeople to get the work done. As soon as we step up into development, it's a different scale. And so what I would be saying there is that you're no longer looking at individual trades, you're going to be looking, you can afford to get a main contractor. So that's kind of quite a significant change. The other thing that I would be doing is getting a cost consultant or quantity surveyor involved in the project. So from the outset, their role is to go out and give you some indicative costs for the project, which you can then use to basically work out your business plan. Does the deal stack up? And then beyond that, if the deal does stack and you go ahead with it, then you would end up running a tender with however many contractors and getting pricing in that way. So the way development works at that next level up, we're still talking small scale, and the mechanics in many respects are not massively different to what landlords do when they refurb properties and rent them out. They're obviously quite often in this situation, developers are selling the products at the end, but the principle is broadly the same. It's just that the numbers involved, even at a small scale level, are more significant, and that allows for us to employ more expensive professionals at the end of the day, a main contractor, and then we've got cost consultants who are able to advise us with regards to the pricing. So yeah, I wouldn't be taking round a jobbing builder or individual trades to price up for you. Get somebody in to do it properly. There
Excellent.
You go. That helps.
We're pretty much run out of time, but let's very quickly answer a couple of quick questions to finish off because I want to. So Helen says, seeing lots of police stations are up for sale, could we convert them into residential with PD? Thank you. No, you can't. Okay, and she actually goes on to say this police station is actually a residential house. Probably not. Okay. Now PD, you're right in terms of minimal modifications from the outside are minimal, but PD actually only gives you the right to change the use in commercial sense. It's not anything on the outside. You have to go for planning for that, but that's not normally controversial. But a police station, unfortunately, is an institutional type building. It depends quite what category it fall under, but I'd be surprised if it comes under anything that will let you convert it. Okay, so it's not an office, it's not B1, you know, it's not a shop, it's not retail, and those are the current opportunities that we have under PD. And I don't think it'll even come under the new super class E, which will let you convert it in August. Police stations are often institutional buildings, community use buildings, and they fall outside of that. They're in probably one of the F1 or F2 categories. Check with the planning consultant though, Helen, because they might say, no, there's something specific about this particular police station that means it can be, but normally you can't. And I'm going to end on one final one because it made me smile. And it says, is there a way round not having to pay so much corporation tax? 25% tax seems a lot to pay, and does it make it worth doing development? Question mark, says James. Well, James, there's probably a way around not paying so much tax, but you might end up inside if you do it. So you're going to have to pay it, okay? Now, the great thing is, I'd say two things on this. One, get a good accountant, okay, and run your business as efficient as you can within the rules and regulations that you're allowed to, because there's lots of things that you can do in business, okay, to offset your taxes, okay, and not have to pay so much. Legitimately, I'm not talking about squirreling money away or taking cash from an offshore account, you know, in a big suitcase. No, there are genuine things you can do. Here we're talking about investment and R&D and that sort of stuff. There's lots of things out there you can do. A good accountant will help you. But I remember I sold a business out for a pretty healthy sum quite a few years back, and I had to pay a fairly big tax bill. It was a big six-figure tax bill. And I balked at it, and my accountant said, he said, you should be very pleased that you have to pay a big tax bill. And I said, why? He said, because that means you must have made a lot of money. And that's what I'd say, James, is don't worry about it. If you've got big tax bills, it must mean you're making big profits. So I know that's what the government are putting on 25%, but just, you know, suck it up. If you've got, you know, a £200,000 profit coming out and you've got to pay 50k, I know you don't want to pay 50k, but you've just made 150k in your pocket. That's not too bad, is it? And you probably won't pay that much because you can offset things. So there we go, James. Unfortunately, yeah, you're going to have to pay it. That is pretty much the end of the show. So hopefully you've enjoyed that. Please put your comments in the chat box if you have enjoyed the show. We do like to hear those in there. Obviously, you know, if there's anything rotten or bad, then please don't put that in there. If you think that Ian needs to lose a bit of weight as well, that would be good. But other than that, you know, if you think it's just me, then and I'm looking trim, that's fine. Now, anyone out there, if you are thinking about getting into property, if you're new, we do still have running some free 3-hour sessions if you want. We've actually got one on this Saturday. I think we've got a couple of places left. It's called the Property Six-Figure Roadmap if you're interested. It's a completely free event, and if you're interested to come along and dip your toe in the water, Ian and I will run it. Just go on to propertyceo.co.uk/roadmap, and if you want to sign up for that, you can. You won't find that on our website anywhere. We don't publish this out, but if you're interested, anyone's on Open Door, you'd be more than welcome to come and join us on. I think we're running one Saturday and one next Wednesday evening, so we've just got two we're going to run this month. So propertyceo.co.uk/roadmap. I think that's it for this evening. We're back next Thursday on the 11th, aren't we, Ian?
We are, when the coffee machine will either be repaired or replaced. Looking forward to that. If I'm a bit grouchy on Saturday and you come on the free half-day session, apologies in advance.
Good. Okay.
I also, sorry, just to add, I'm hopeful that the emergency haircut that I urgently need may contribute to my impending weight loss. Keep up with the factions.
Good stuff. Well, we're glad you enjoyed the show. A few comments in the chat box. Charlotte says, great show as always, thoroughly enjoyed it. Gabriella says, great, wouldn't be anywhere else on a Thursday evening. Ranjit from Property Investor News says, another excellent show with budget update summary. Ranjit Singh from Property Investor News. Yeah, we know who you are, Ranjit. Okay, everyone knows that. Chris says, thank you, gents. Brilliant session as always. Richie, can you share your diet success strategy another time? Yeah, very simple. I'll share it right now. Eat less, move more. That's all you need to do. Dan says, thanks, guys. Great show as always. Very good. Thank you, says James. And Helen says, loving you guys. Ian, you are lovely. Do not listen to Richie. What? You don't work with him, Helen. I work with the fella. Unbelievable. Patrick says, thanks, guys. See you Saturday. Oh, Patrick's going to come on Saturday. No problems, Patrick. We look forward to see you. Clive says, cheers, guys. Thank you, says Brian. And Yoko says, thank you very much. Enjoyed, informative always. See you next week again with a little kiss at the end. A little kiss to you all. Goodbye. See you soon. Bye-bye.
Goodbye.